So in this video, I'm going to provide you with all the info you need so you can be ready to buy a home in 2021. But not only how to buy a home in 2021, but how you can take advantage of Joe Biden's housing plan so you can come with as little money out of pocket as possible. Stick around because it's going to be a good one. I'm Sir Ashley, and I've been involved in real estate in the aspect of a real estate attorney, a licensed realtor, and a real estate investor. So I'll come to you with real-world practical knowledge, and on this channel we talk about money, real estate, and all things Charlotte. So if you like any one of those things or interested in any one of those things, go ahead and hit that subscribe button. Now there will be timestamps in the description down below so you can jump around to the portion of the video that is pertinent to you, but here's a quick outline of what we're going to go over. First, we're going to talk about credit, what it is, where it needs to be, and how to position yourself to improve your credit score. The second thing we're going to talk about is down payment, what down payment is and how much is needed for certain loans, or if you need a down payment at all. The third thing we're going to go over is lenders, who they are, and when you should contact them in the process of wanting to buy a home. Fourth, and probably your favorite, is house shopping, when to buy, what to buy, and even if you should use a realtor when buying. Then we're going to talk the process. This is my favorite. Number 5, the process of buying a home, negotiations, contracts, inspections, and closing costs. And finally, we're going to tie in together how all of this works and how you can use Joe Biden's housing plan so you can put yourself in position to capitalize on the system and have it work for you for a change. So get your notepads ready because this is going to be a thorough step-by-step process on how to buy a home in 2021. It's going to be a deep dive. So if you can't catch it all right now, go ahead and put a playlist or make a playlist and put this in it so you can watch it later on. Let's jump into it. What is your credit score? Your credit score is nothing more than a report card of how well you are at paying back loans. Now, those loans could be a car loan, a student loan, any kind of bank loans, a credit card loan. It doesn't matter what type of loan it is. It's just a compilation of your history of paying back loans. Now, credit scores range in between 300 and 850. Now, credit scores above a 700 is considered very good, and credit scores over a 750 is considered very good. Now, there might be several reasons why your credit score is not where you would like it to be. One thing it could be is just a poor payment history. The second thing could be a lack of credit utilization, simply meaning you're not using enough credit. Now, that's something like an incomplete, meaning you haven't done enough work or shown the teacher that you're good at what they assigned. So that just means you have to use more credit so they can give you more credit. Kind of backwards, but that's how it works. Another reason why your credit score might not be where you want it to be, you might have been a victim of identity theft. I can attest to that. I've had my identity stolen. It's kind of weird. My name is Sir Ashley. How many Sir Ashleys are there in the world? But yes, anybody can be a victim of identity theft. So please check your credit reports often so you can avoid this and just stay on top of it. While we're on credit, let me quickly go over and tell you that you want to make sure all of your accounts are in good standing and that there aren't any late payments. Now, creditors look back 24 months to see if there's any late payments. So ideally, you don't want any late payments in the past 2 years. But if you've been on track for a solid year and not have any late payments for the past year, that is very solid and your credit score will increase drastically. If you want future tips on your credit and how to improve your credit score, go ahead and hit that subscribe button because there will be plenty more videos on the topic in the future. Now, you can get approved for a mortgage with a credit score as little as a 580, but it's going to be very, very difficult and you're going to have a significant down payment. Now, when I mean significant, I'm talking about anywhere from 15 to 25% of the purchase price as a down payment. Now, remember, lenders have to feel comfortable loaning you money. And your credit score is nothing more than a report card of how well you pay your loans back. And a credit score of a 580 doesn't give the lender much confidence that they're going to get their money back. So they require the borrower to come out with a significant down payment for such a low score. So ideally, you want your credit to be between a 620 and a 640 before you even get serious about searching for a home loan. But if your credit score is a 750 and above, that pretty much makes you eligible for the best interest rates available. Now let's talk about down payment. A down payment is the amount of money you spend up front to purchase a home. It's the money that you initially come out of pocket with when you buy a home. Now, a down payment, when it's combined with the home loan, that is used to fulfill the total purchase price of the home you're buying. Now, the down payment amount varies. It varies on a few things. It could vary on the type of loan you're getting, and it also varies on your credit score. Oftentimes, clients tell me that it's the down payment that is hindering them from being able to purchase a home. And I want to make this clear to everyone, so hopefully I can clarify some things right now. Because the truth of the matter is, if you're wanting to buy a home in 2021, you do not need a down payment depending on the loan you're seeking. Now, there are certain loans, a VA loan, that doesn't require a down payment at all. Now, in order to qualify for a VA loan, you have to have been a veteran and served in the armed forces. But there's also something called a USDA loan, which is eligible for all people. Now, that just means that your property has to be in a less populated area. Now, it doesn't mean you have to be out in the country in the middle of nowhere. I live here in Charlotte, and there's actually two communities in South Charlotte right now. One is about 300 homes, and the other one is just over 200 homes. And both of those large communities qualify for USDA loans right here in the city of Charlotte. So please do your homework and see if any homes in your area qualify for a USDA loan. All right, now back to down payments. Down payments can range anywhere from 3.5% to 15% of the home purchase. Yes, I want you to save your money, and a lot of people use their tax returns for their down payment monies. But stick around to the end of this video so I can tell you how you can take advantage of Joe Biden's housing plan to offset some, if not all, of your out-of-pocket expenses for your down payment. But please also check with your local area to see if there's any grant programs that offer down payment assistance. My client here in Charlotte just received $30,000 to go toward her down payment. Yes, you heard that correctly, $30,000. And I want you to check with your local banks and lending institutions to see if they're offering any money for down payment assistance. Here in Charlotte, Bank of America is offering $17,500 in free money, depending on the location of the property, and down payment assistance and closing cost assistance. So please, these opportunities are prevalent and they're available. You just have to do some research and some due diligence on your part to find where this free money is. And we haven't even touched on or talked about Joe Biden's housing plan, how you can get even more free money towards your down payment. At this point, you've been working on your credit to make sure you have a credit score of at least the 620, and you're starting to save some money, and you're doing research on how to get your down payment monies from different organizations or banks. Now it's time to talk about lenders and understand what the different loans they offer. Now, lenders can be individuals who work for a specific bank, or they can be a mortgage broker who has access to various lenders' products, and they will shop you around to see which lender works best for you. There are conventional loans and FHA loans. Now, according to the U.S. Census, conventional loans are the most popular loans here in the U.S. You might be asking, what is a conventional loan? A conventional loan is issued by a bank or a private lender, but an FHA loan is something that is issued by a bank or private lender, but it is backed by the U.S. government, and the government protects that lender in case the borrower defaults. For a conventional loan, you typically have to come up with 10 to 15% of the purchase price of the home for a down payment. And your credit score has to be a little bit higher, typically, like I said, around 640 in order to qualify for a conventional loan. But when you qualify for a conventional loan, you'll be very glad that you did, because you'll be paying less money overall for the purchase of your home. You'll be paying less in interest over the lifetime of the loan. Now, on the flip side, an FHA loan, the buyer could put down as little as 3.5%. Now, that means on a $400,000 home, the buyer could put down as little as $14,000. But FHA loans are much riskier to the bank, and they cost the buyer a lot more money. The buyer, because they're riskier, they're going to pay for that risk. Typically, the buyer will have much higher interest rates, and the loan will have something called private mortgage insurance. The private mortgage insurance, also known as PMI, is something that the buyer will be paying every single month. Why? Because they're more riskier to loan money to. So with an FHA loan, the buyer or borrower will be coming out of pocket with less money, so it looks very attractive. But in the long term, with the added interest and the PMI, they'll be paying much, much more money for that same property as opposed if they went conventional. You might be wondering, so which is the best option for me? Honestly, it's up to you. You have to make the best decision for you and your family and your situation. But if you were to ask me what option should you go with, if you could choose either one, I will always say go conventional. Why? Because you'll be paying less money over the life of the loan. You'll be paying less interest, and you will not have to have that additional expense of private mortgage insurance. Oh, while we're still talking about this, I almost forgot something very practical. So, right now, it is a seller's market. If you're looking for a home or if you've looked for a home, you will know that there is multiple offers on every property. And sellers right now, they look more favorably on people with a conventional loan. Why? Because it just looks like that person has their stuff together, meaning they have their down payment and their credit is where it needs to be, and they don't have to worry about that FHA buyer or potential buyer flaking out and not being able to get approved or get their loan finalized. So it just looks better for you, the buyer, when your realtor presents your offer to the seller and it says conventional loan on it. All right, now we know what a lender is and we know what the two major types of loans are. So now let's talk about how to get you approved for a loan. Getting approved for a mortgage is based on three factors, and those factors are your credit, your income, and your debts. Now, we talked about it before. I want to make sure your credit score is at least a 620 or above, but if you're at a 750 and your debt to income ratio is at a 41 or lower, you will have the best options available to you. So that's what we're going to strive for, because we want you to have the least amount of monthly payment as possible. Now, when we're talking about getting you a home loan or getting you approved for a home loan, we want to make sure all your accounts are current and that you do not have any late payments for the past year, preferably the past 2 years, but the past year will get us on a good start. And regarding income, we want to make sure you have at least 2 years of consecutive work history in the same industry. That does not mean you had to work for the same employer, but lenders want to know that you have a stable employment and that you're not just finicky or flaky when it comes to hopping around from job to job. So keep track of your W-2s. And nowadays, lenders are going to want your last two W-2s. No, you don't have to give them your entire tax return, but have your last two W-2s handy so you can give them to your lender. Now let's quickly talk about people who are self-employed. Now, this may seem a little counterintuitive, but if you want to buy a home, this is what you should do. One, contact a CPA. I am not a tax professional, so verify all of this with them, but this has been my experience going through the process. You want to make sure you keep your deductions to a minimum. Why? Because if you earn a lot, but if you take out a lot of deductions, that makes it seem like you don't really earn a lot because you took out a whole bunch of deductions. But you want to get approved for a home loan, so we want to make sure your income is as high as possible so you can get approved for the mortgage you want. Again, contact the CPA, but keep your deductions as low as possible for at least 2 years if you plan on buying a home and you're self-employed. Now let's talk about house shopping. This is the fun part because you've talked to the lender, you know what you can get approved for regarding the price of a home. So now it's time to go shopping. This market is a bit crazy and the inventory is crazy low right now, but there are still plenty of opportunities, but you have to be prepared and act fast. And all the steps we've gone through up until this point will allow you to act swiftly when you see a property that you want and put you in position to get your offer accepted. So the questions we asked in the beginning of this video regarding house shopping were when to buy, what to buy, and if you should use a realtor when you're buying. But before I answer any of those questions, I want to tell you this. This may seem a little bit outside the box, but please hear me out. For 2 to 4 weeks, I want you to go with a friend, a colleague, a loved one, your partner, and go look at every open house available that is in your budget and in a location that you want to live. Why is that? Because I want you to see what is on the market. I'm telling you to go look at as many houses as possible so you can see what's out there. Now, I can't tell you how many times I've shown clients what is almost a perfect home for them, but they did not act because they wanted to see what else was on the market. And then after a month, 2 months, 2.5 months of continued searching, they had regret because they did not act on one of the first houses we saw. Why? Because they wanted to see other properties and they weren't sure that this is the one that actually fit their needs. So please, let's avoid any potential regret and go out and look at the properties that are available in your price range so you can have an idea of what you can compare and contrast, and you know the perfect opportunity when it becomes available. Now, let's get to the first question. When should you buy a home? Well, that's easy. You should buy a home when you're ready to buy a home. Now, there is no set schedule on when you should buy a home. Just do it when you're ready. I could have a 45-minute conversation with someone regarding if the springtime is the best time to buy a home, or if winter or fall is the best time, or if you should buy it right now because the market is high. Shouldn't you wait till the market is low? It all comes down to buy when you're ready. I don't want to tell people to put off buying because prices are high right now, because interest rates right now are at historic lows. Now let's talk about what to buy. If you're interested in house hacking and gaining assets quickly, I say buy a 2 to 4 unit multifamily where you can live in one of the units and rent out the rest. But I understand that that situation is not ideal for most people. Most people want a single family home. So my advice to you is to buy a home that fits comfortably within your budget. You don't want to go to the top of your budget because, again, we don't know what the future holds. And I want you to be able to be comfortable in making your mortgage payments. Even if that means expanding your home search to a distance outside of where you initially thought. So long as it checks off all your boxes you're looking for, such as a safe neighborhood, a place to raise a family, and good schools. As long as you have those things, those are the three major things that most of my clients are looking for. I say go ahead and expand your search if you can find a property that fits comfortably within your budget and not at the tip top of your budget. Now, moving on to the question of if you should use a realtor. Absolutely, you should use a realtor. Yes, you need a realtor when you're buying a home. Look, when you're buying, you want somebody on your side to look out for your interest. The seller, they're looking out for their interest. They want the most money for the property. And their realtor is doing the same. They're looking out for the interest of their client. They may seem nice, they will be nice to you. They're professionals after all. But it's their goal to get the most money for their client. And if you're buying, more times than not, it is free for you to have a realtor. So it just makes sense to take advantage of that and have a professional represent you so you can get the best deal possible, but have all your interests looked out for. Bottom line, each state has their own guidelines and practices when buying and selling a home, and you want to make sure that you're covered. You want a professional who knows the ins and outs of what processes need to be accomplished along the way so you can close smoothly and hassle-free. Now let's talk about the process of buying a home. This is my favorite part right here. The offer, the negotiations, the inspections, the contract, the due diligence period, all of that. Let's get into that right now. When you find a property that checks all your boxes and is within your budget, it's time to make an offer on that property. Right now, it is a seller's market. So if the property is priced correctly and it's nice looking, chances are there will be multiple offers on the property. So your realtor will have to put you in the best position possible and make you shine in the best light possible so you can get your offer accepted. When I or your realtor presents your offer, it will have 5 things in it: the purchase price, the due diligence deposit, your earnest money deposit, your due diligence time frame, and the proposed closing date. Sorry, I'm having a tough time talking right now. Your purchase price is this the total price of the property that you're offering the seller. And as an investor, I get it. The goal is to pay as little money as possible when you're buying a home or buying anything for that matter. But when you're making an offer, especially when there's multiple buyers in the situation and competing for the same property, my advice to you is to put down a purchase price that you will not regret offering. What do I mean by that? Well, I want you to think long term. I don't want you to lose a deal and then end up kicking yourself because you didn't offer an additional $3,000. Whereas if you think long term, that additional $3,000 is just an extra $14 a month for the life of the loan if you keep that loan for 30 years. So if the home checks all your boxes, and is it worth an additional $14 a month? I say go ahead and offer that extra $3,000 so you don't miss out on your dream home. Now, your purchase price is going to include your due diligence deposit and your earnest money deposit. Now, your due diligence deposit is non-refundable. You're not going to get that back. And typically, for most homes, your due diligence deposit is going to be anywhere from $500 to $1,500. Now, the due diligence deposit is given from the buyer to the seller to allow the buyer to be able to inspect the property, to do their due diligence. And again, you will not get that back. And the earnest money deposit is a deposit you give to the closing company or the attorney, depending on your state. And that just shows the seller that you're serious about moving forward with their property. Now, earnest money can range anywhere from $1,500 to $5,000, depending on the purchase price. But earnest money can be refunded to the buyer if you back out during the due diligence period. Before we move on, I want to go back to due diligence and the due diligence deposit. Now, I want to make sure you get an inspection on the property. I don't care how old or how new the property is. It could be brand new construction. Get an inspection. Get several inspections. What I mean by that is you want to get a normal home inspection. You want to get a radon inspection depending on the foundation or what type of foundation the property has. And you want to get a pest and termite inspection. Hey, you've already given the seller your due diligence monies. You might as well capitalize and do your due diligence on the property to make sure you know exactly what you're buying. Or during the due diligence period, after you've gotten the inspections, you get a chance to renegotiate with the seller, or your realtor can renegotiate with the seller concerning the purchase price, because the inspector will always come back with something. They're going to come back with a lot of things. And it's going to be between you and your realtor to go over the inspection report to determine, hey, what's serious, what needs to be addressed, and what's just commonplace that you're not really worried about. Now, when you go back to the seller to negotiate regarding the findings of the inspection report, don't be surprised if they don't go ahead and fix everything. Typically, at least here in North Carolina and here in Charlotte, the seller will typically give a credit. So we've talked about down payment. We've talked about the entire home buying process, step by step, so you can buy a home in 2021. Now let's talk about Joe Biden's housing plan and how you can capitalize and leverage it so you can buy a home in 2021. So Joe Biden won the presidential election, and his administration is proposing a $640 billion fund for housing over the next 10 years. Now, I won't go into all the details regarding his housing plan, but I will talk about the two things that is pertinent to you and how you can leverage it to buy a home in 2021. One of the things the Biden administration wants to do regarding housing is to increase the housing supply. You see, housing prices has gone up dramatically in the past few years for a couple factors. One, interest rates are very low, but more importantly, there's just a lack of inventory. So everything that goes on the market right now, if it is remotely decent, has multiple offers on it. There's just a severe shortage of inventory. The Biden administration is putting $300 million toward increasing housing supply. This is huge because that is one of the main problems we see in the housing market right now. And with that increased housing supply, hopefully that levels off housing prices or even cause them to come down to make housing more affordable for more people. Now, this part of Biden's housing plan is what I find most interesting, and I'm shocked that more people aren't talking about it. It's a tax credit of up to $15,000 to home buyers. Now, that isn't something new. This isn't something new, the idea of a tax credit. The Bush administration did it, and then the Obama administration did it. The Bush administration gave a tax credit of up to $7,500, and the Obama administration bumped that up to a tax credit of $8,000. Now, the Biden administration is bumping that up to $15,000. Now, it doesn't mean that everybody's going to get $15,000 because it says up to $15,000. So we'll see exactly what that amount will be. That is why I'm encouraging you to still go ahead, start saving money, and also look at programs in your local community that offer down payment assistance and closing cost assistance, whether it be a program, a grant, or even some local lenders. This change and new implementation of the tax credit is a game changer and allows many more people to be able to see the light and actually think about home ownership because their biggest hurdle, as far as the down payment, will be removed out of the way. So as long as you do your part regarding your credit, saving money, and reducing your debts, 2021 will be your year of home ownership. Just go through this step-by-step plan that I've laid out, and it'll tell you what needs to be done along the way. Again, if you're interested in money, real estate, or anything related to Charlotte, go ahead and hit that subscribe button. Talk soon.